If you are one of the 2.5 million people that are currently in forbearance, or you think you're facing foreclosure, then you really need to understand the guidance that was provided by Consumer Financial Protection Bureau earlier this week before you panic. Welcome to my channel. My name is Kelly Wise. I am a licensed real estate agent here in the state of Maryland. Before we jump into the guidance that was provided by the CFPB, let's start with some basics. Through the CARES Act, homeowners were allowed to go into forbearance without providing detail of their hardship. There was also a moratorium placed on foreclosures. Both of these have been extended several times now through June 2021. In addition to that, all homeowner had to do to go into forbearance was call their service provider and let them know they were experiencing a hardship due to COVID-19. There are currently still a lot of people that aren't in a forbearance program. In fact, it's about 242,000 that are 90 days past due on their mortgage, which means they're facing foreclosure, and they should probably be in a forbearance program and maybe just weren't aware of the option. What is forbearance? Well, it literally means to put on hold. In the case of a mortgage payment, it is the borrower and the service provider that create an agreement for a set amount of time to put the monthly payments on snooze. At the end of the forbearance period, the borrower will then need to pay back the snooze payments as well as begin paying their monthly mortgage payments. Depending on the service provider, those missed payments or paused payments can be paid back in a lump sum or a repayment plan in addition to your monthly mortgage payment, or the lender can move them to the end of the loan. If the borrower cannot pay back these snooze payments, then they have three options. One is to request a loan modification. The other is to sell the home. And lastly, the one that we try to avoid the most is they could face foreclosure. The share of forbearances that are currently in the U.S. actually dropped below 5% in March of 2021 for the first time since the beginning of the pandemic in March of 2020. This is great news because it means more people are actually paying their mortgages right now. However, Mortgage Bank Association still says there's about 2.5 million people in forbearance. Now, keep in mind, and it's good to note, that a lot of these people actually have continued to pay their mortgages even though they are in a forbearance plan. They're using forbearance as a backup in case something happens to one of their incomes. At the beginning of April, Chief Financial Analyst for Bankrate.com, Greg McBride, was quoted as saying, "Initially, the CARES Act provided for about a year of mortgage payment deferral for homeowners with federally backed loans. While that seemed sufficient at the time, the pandemic and its economic fallout is dragging on far longer than had been expected." He then continued on by saying, "Extending the forbearance available on federally backed mortgages is a critically important move to preserve homeownership for millions of households that have seen income disruption or outright job loss due to the pandemic." On April 1st, the Consumer Financial Protection Bureau issued a warning to all service providers stating that they should be preparing starting now for a wave of homeowners that are going to need help at the end of their forbearance period when the moratoriums end this summer and fall. Then on Monday, April 5th, 2021, the CFPB took it a step further by providing a new rule and guidance that would eliminate foreclosures for the remainder of 2021, saying that they couldn't start the procedures until December 31st, 2021, with a few exceptions. In this new rule guidance provided by CFPB, they have outlined 3 ways service providers can help homeowners that are currently in forbearance. The first way is to have more time for homeowners to pay back what's in forbearance, and they have outlined steps for a pre-foreclosure period. The second option is to allow for a more streamlined modification loan process. This would save a lot of time for both the borrower and the servicer on paperwork. Basically, with regulatory 10 or X, whatever you want to call it, the servicer is required to have the borrower fill out paperwork for every possible loan modification option. With this new streamlined guidance, they would only have to fill out the paperwork for the option that best suits the borrower. Now, there are some caveats. The loan cannot increase the borrower's monthly payment, and it cannot be extended for more than 40 years. Number 3 in the rule in the new guidance provided by the CFPB is to allow service providers to have more ways of communicating with the borrower. Oftentimes, service providers will only send something in the mail. Who reads the mail these days? Nobody. Everyone chucks it. So in this case, now service providers can call, can email, and send stuff in the mail. They want to make sure that the borrower is aware of all of their options before going into foreclosure. If you would like to read the entire document provided by the CFPB for the new rule and guidance, I have placed a link for it in the description box below. So what does all this mean with the guidance from the CFPB? Well, it means you most likely won't see a lot of foreclosures in 2021 as service providers actually reach out to consumers and borrowers and try to help them through this crisis. Anyone that's struggling to make a payment should reach out to their service provider before they miss a payment. Same with if you are in forbearance, you should reach out to your service provider before that forbearance comes to an end. That way you can work with them to create what options work best for you in order to keep your home. I really hope this update on the Forbearance and Foreclosure Moratorium was very helpful and informative. If you found it so, please click the like and subscribe button so that you don't miss new videos when I upload them each weekend. If a loan modification is the next step for you after forbearance, or possibly before even going into forbearance, then there are free resources, through HUD and NACA that will help you negotiate your loan modification with your service provider. Thank you so much for watching. While you're on my channel, check out these other videos. My name is Kelly Wise. I am a licensed real estate agent here in the state of Maryland. See you in the next video. Bye!